This foolproof trading strategy is the only thing that you need to be profitable in 2026. Why? Because it's simple, systematic, and consistent, giving me results like this, and this week after week. And today I'm going to teach you the full strategy step by step. I'm also going to show you real trade examples, and then I'm going to show you the backtest results to prove that this works. Now you might be wondering, why am I calling this foolproof? Because when a strategy is simple, there is absolutely zero room for error. Let's get into it. The first thing you need to understand is that this strategy is built around levels and reactions. We're not predicting where price is going to go. We're identifying key levels where the most orders are clustered, and then we are trading the reactions at these levels. So what levels are we marking? The first level that we are going to mark out is going to be the first 15-minute candle from 8 to 8:15 a.m. Eastern Standard Time, and we're going to do this on the 15-minute time frame. I have an indicator that actually shows me when these sessions start and stop. Here it is. It's called FXN Asian Session Range. It's completely free. You can get it on TradingView. I'll show you guys my settings for the start and stop time real quick, so you can pause the video, screenshot this, make sure your settings are all synced up to mine. All right, now all we are going to do is we're going to take this little rectangle tool and we're going to go to 8 a.m. and then we're going to mark out the entire candle from the top wick to the bottom wick. The next levels we're going to mark out are going to be untested highs and lows, meaning highs and lows that have not yet been tested or touched. So for the sake of the example, we're going to go in market replay mode, and then we're going to go ahead and mark out this low just like that. And then we're also going to mark out this low. One of the most important things here is that we are marking out levels that have not yet been tested. So the second this level gets tested, we're actually going to go ahead and delete it like so. And now this is our next untested level. These are the most powerful levels because all of the orders are sitting here waiting to be triggered. Once you have your levels marked, you do nothing. You simply wait for price to come to one of your levels and show you a solid reaction. That's it. That's the foundation of this entire strategy. Now, before I show you the setups, I need to explain why this strategy works the way it does. Because if you don't understand the why, you are just going to be blindly following rules. This strategy is built on one core concept: liquidity. My godfather, who was a trader at Goldman Sachs for over 30 years before he retired, explained it to me like this. Banks don't look at charts the way that retail traders do. They don't care about support and resistance lines or Fibonacci levels or ICT. They look at where the most orders are sitting in the market. Because when you're a bank trying to fill a $500 million position, you need to know where you can actually get filled. And where are most of these orders sitting? At previous session highs and lows, and at the 8 a.m. candle opening range. Let me explain why these specific levels are so critical. The market trades in three major sessions: Asia, London, and New York. Each session has a high and it has a low. And these highs and lows represent the extreme points where most traders entered positions during that session. Think about it like this. When the New York session makes a new high, every trader who shorted near that high is now trapped. They are actively in drawdown. They're losing money and they are emotional. And what do trapped traders do? They wait for price to come back to their entry so they can get out at break even. So when price comes back to that session high, all of those trapped shorts are desperately trying to buy back their positions to exit. And what does that buying do? It pushes price higher. The same exact thing can happen at session lows. When price makes a new low, every trader who went long near that low is now trapped. They're in drawdown and they're losing money. And when price comes back to that low, they are selling their longs to get out at break even. And that selling pressure further fuels price lower. This is the psychology of trapped traders, and the banks know this. The banks engineer moves to these session highs and lows because they know there's a massive amount of orders sitting there. There's orders from trapped traders trying to exit, and there's orders from breakout traders that are trying to enter. It's a liquidity pool, and the banks use these pools to fill their own massive positions. Now, why do we focus specifically on the New York, London, and Asia trading session? Because these are the three largest trading sessions in the world. They have the most volume, the most participants, and therefore the most liquidity and the most opportunities. When you mark the highs and lows of these sessions, you are marking the levels where the most institutional activity happens. You're marking where the big players set their positions. And when price comes back to these levels, you are trading at the exact spot where the institutions are looking to grab liquidity. Now, the 8 a.m. candle is very special for three reasons. The first reason is that it has the highest volume of any 15-minute window during the entire trading day. This means that the most orders are being placed, the most liquidity is being moved, and the most institutional activity is happening during this time. When volume is high, that tells us that the level matters. The banks are setting the tone for the day. The second reason is that it creates a clear range that acts as a magnet for price. The high and low of this candle create a range, and throughout the day, price will either break above the range and continue higher, or it'll break below the range and continue lower, or sometimes it'll chop around inside the range. The range becomes the battlefield for the day, and we are trading the reactions around it. The third reason is that it removes the guesswork. Instead of looking at a full chart with hundreds of candles and trying to figure out which one matters, we are focusing on one candle. That's it. This one candle tells us where the liquidity is, where the key levels are, and where we should be looking to enter trades. Now here's where it gets really powerful. Let me explain the psychology behind the break and retest setup. Let's say price is sitting inside the 8 a.m. range, and then at 9:30, price breaks below the low of the range. What just happened? Every single trader who entered a long position inside that range is now in drawdown. They're losing money, they're emotional, and they're panicking to get out of their positions. And what do emotional traders do? They hold on to their losing positions, hoping price will come back so they can get out at break even. So when price breaks below the range and then comes back up to retest the low, all of these trapped longs are sitting there waiting. And the moment price touches their entry level, what do? They sell. They exit their longs. They want out. And what does that selling pressure do? It further fuels the move back down. This is why the break and retest setup works so well. You're not guessing. You are trading at the exact level where trapped traders are forced to exit their positions. In other words, you're capitalizing on fear and desperation. And the banks know this. They engineer these moves specifically to trigger these exact reactions. When price breaks a key level, the banks know there are trapped traders on the wrong side. And when price retests the level, the banks know that these traders will exit, providing the liquidity that the banks need to fill their own massive positions. So our job is simple. Identify these liquidity levels and trade the reactions at these levels. We are not fighting the banks, we're trading with them. We're following the order flow and we're following the liquidity. And that's why this strategy actually works. It's not based on some random pattern, it's based on how the biggest players in the market actually move price. Now let me show you exactly what we're looking for. All right, so now that you understand the why, let me show you the what. There are a few setups that we are looking for every single day. The first setup that we're going over is going to be a break and retest. Here's exactly how this setup works. The first thing we do is we mark out our first 15-minute candle from 8 to 8:15 a.m. Eastern Standard Time, and we do this on the 15-minute time frame. We then wait until 9:30 and see if price is breaking out to the upside or to the downside. It's very clear today that price is breaking out to the downside, so we are going to go ahead and target some shorts and place our entry right at this midpoint with a stop loss of around 5 points. Targeting 15 points, or we can just target this London low right here. This is a perfect trade because price is probably going to bounce when it hits this London low, so we want to get out right there. I then like to go on the 5-minute and the 1-minute time frame to observe exactly what price is doing on these smaller time frames and make sure that it is indeed respecting the midpoint. Boom, right guys? So we just tapped the midpoint. So we're going to go ahead and target this London low. I'm expecting price to bounce right when it hits this London low. So I want to get out of my shorts at this zone. One of the best tips I can give you guys is that when you're placing your stop loss or your take profit, you want to place these at levels of clear invalidation, meaning you want to be taking profit right where you expect price to reverse, or you want your stop loss right where you expect, your trade to be clearly invalidated. So let's see how these shorts play out. Looking good, looking good. Boom, we just got out of our shorts, and just as I expected, price bounced right at London low. All right guys, so now I'm gonna give you another example of this break and retest setup. So I wanna show you guys exactly what went on this trade, right? Because I did take a loss and then I had a win. So I just wanna be transparent with you guys and show you guys what a losing trade looks like with this setup. So as always, we mark out our candle. And today we were obviously looking for a retest to the downside, targeting London low. And the first time I got stopped out, right? Price broke through the stop loss. It looked like it was gonna come down, but it didn't. Stop me out and I didn't make any money there. So I actually lost $2 grand there. But the good news is I followed my rules. I didn't over risk. So I decided to enter one more trade with a little bit wider of a stop loss, targeting the London low. So this trade ended up actually playing out and making me quite a bit of money, right? You guys can see we got the retest right here and then the continuation and then boom, right? And on that trade, I was able to catch around 18 points and I made $15,000. So I obviously made back my losses and then some. If I were to really break down why I lost this trade, I would just say that I entered based off of what looked like the midpoint being respected, but in reality, the midpoint was not being respected. We ended up chopping around a little bit, just unlucky. There's really nothing I would do differently in this situation, so I'm not gonna get too hung up on it, but losses happen. All right, everyone, this next setup that I'm going to teach you is called a bounce off of an untested low, and I love this setup because it is so incredibly simple. All we're doing is we are looking at our lows and we are seeing which lows have been tested, and we are gonna be trading this day. So in this scenario, this low is gonna be an untested low, and we are gonna go on market replay and go to this candle right here. And you can see that we have a few untested lows. We have this one, and then we have this one. As a rule of thumb, the farther back a low or a high is, the stronger it is. So this untested low is gonna be a lot stronger than this one, meaning if we plan on taking a trade, we should probably be looking at this level, not this level. So we are going to go ahead and plan to take a buy position when price hits this level. If price does not close below this level on the 15-minute time frame, and we're gonna have a 8-point stop loss, and we're gonna go ahead and target 30 points for a risk reward of 1 to 3. I use two main factors to determine how big my stop loss is gonna be. The first main factor is, where do I think price is gonna go? If I think price is gonna move, 30, 40 points, I am okay with having a little bit wider of a stop loss just to give myself some wiggle room, because I am targeting a 1 to 3, 1 to 4 risk to reward. The second factor is going to be, where is my trade easily invalidated? And for me, if price gets below 8 points here, that is a clear sign that I am wrong and I do not wanna be in that trade. So we're gonna go ahead and plan to take this trade as long as price can tap this level and continue moving up. All right, everybody, so we just had a clear sign of disrespect of this low. As we talked about, this low isn't as strong, but we just tapped this low and we are bouncing up. We have had 0 candle closures below it. So we're gonna go ahead and enter this trade right here like so. And then boom, we hit take profit super fast on that trade. Price swept this low and then immediately bounced up. When price hits one of these levels, you are looking for a strong rejection candle, meaning a candle with a long wick and a close back in the opposite direction. For example, right here, we had a long wick, we went under this, but we didn't close under it, and then we closed back above here, showing us that buyers are pushing price up. Even though it can be tempting to enter immediately when price hits this level, I like to wait for 5 minutes, 1 5-minute candle closure to confirm that the bounce is holding. And then I like to enter on the next candle, so I'm following the momentum. This setup is simply a rejection off of an untested high. So just like we were looking for a bounce like this off of an untested low, this is gonna be the exact opposite. We are looking for a rejection off of an untested high like this. So we want price to come up and then reject right when it hits this line right there. All right, guys, so with this trade, we are gonna go ahead and target 15 points because I'm expecting price to bounce somewhere around this low. So I don't wanna get too greedy. We're gonna go ahead and get ready for this trade. Stop loss of 5 points, targeting 15 right there. And let's see how this plays out, guys. Let's go into smaller time frames and let's observe. All right, guys, so the first thing I'm noticing is that price immediately is coming back under this level after having a few 1-minute candle closures above it. And as long as we do not get a 5-minute candle closure, we are good to go. So we are in some shorts right here, targeting 15 points. Let's see how this goes. Boom, right? We just got out of that trade, caught 15 points. That was a beautiful example of a nice rejection trade. I actually want to show you guys something funny, right? So I got out of this trade here, but you can see that we actually had another rejection that ended up playing out off of that same exact level. That is how powerful these levels are, guys. All right, everyone, I'm showing you guys one more example of a rejection setup. So right here, we have our untested Asia high. We have our untested Asia low. So we are going to look for a rejection off of this untested high, and we're gonna go ahead and have a 5-point stop loss targeting 20 points. The reason we're targeting 20 points is because we have a big distance between this high and this low, meaning price is likely to, just play ping pong between the range. So it makes sense for us to be a little bit more aggressive in terms of the take profit. All right, everyone, so we're gonna go on the smaller time frames and see if price is gonna have a reaction. Alrighty, guys, there we go. So the first sign is that price instantly tapped this level and then rejected. If we can get a few more candle closures under this level, we're gonna enter. Perfect, guys, that is all we need. That's a big sign of weakness. We have a bunch of 1-minute candle closures and a 5-minute candle closure under this level, showing us that price is indeed likely being controlled by sellers. We're gonna go ahead and target 20 points with a 1 to 4 risk to reward ratio and see how this plays out. Boom, that was a beautiful trade, guys. Straight to take profit, and that is the power of an untested high. Now, why does this work so well? Because these levels are magnets for price. When price comes down to a previous session low, all of the traders who went long at that low during the previous session are now watching. If price breaks below that low, they are trapped. So they're literally defending that level. And the banks know this. They push price to these levels to see if there's enough liquidity to break through. And if there isn't, price bounces or it rejects hard. A great analogy is to think of price like a bouncy ball. If you drop a bouncy ball from a low height, it'll bounce a little. But if you throw it hard at the ground, it'll shoot up. Price works the same way. When price comes down to a level fast and hard, it usually bounces hard. Or when it comes up to a level fast and hard, just like this, it usually rejects pretty hard. Now, before we go any further, I want to explain why this strategy is foolproof. Most traders fail because they overcomplicate everything. They add too many indicators, too many rules, and way too many what ifs. And that's where the mistakes happen. I did this for years. I had hundreds of strategies. I used ICT, I used smart money concepts, supply and demand, Elliott waves, support and resistance, you name it, I tried it. And every single one of them kept me stuck in this boom and bust cycle. I would make money sometimes, but the wins were small, $50 here, $100 there, and every time I lost big. And I kept blowing up all of my accounts. It took me years to finally understand one of the most important concepts in trading, and it can be simplified into a few words. Simplicity equals profitability. The more simple you can make your trading strategy, the higher your chances are of becoming a profitable trader. Because when your strategy is simple, you're not second guessing yourself. You're not overcomplicating. You are just executing the same thing over and over again. And that consistency is what compounds into profitability. This strategy only has 3 setups: break and retest, bounces, and rejections. You mark your levels and then you wait for price to come to your levels and then you execute the trade. It's foolproof because there's no room for error. You're either following the rules or you're not. And when you follow the rules consistently, you become profitable. Now, before we go any further, I want to show you all of the data behind these institutional principles to prove that they are actually profitable. Because at the end of the day, without data, without knowing things like your exact risk to reward, your exact win rate, your profit factor, you're not trading, you are guessing. So let me show you the numbers. So here's our prop bot trading system, which uses the exact same concepts that I just taught you, but it has slightly different entries and exits because it is completely automated. Let me show you what I'm talking about. This algorithm trades NQ on the 5-minute time frame, and it looks for breakouts of the average true range, and it scalps these moves. So it's using a very similar strategy to my strategy, but it's using a few more confluences to allow it to have automated executions. You can see that we entered some longs right here at this Asia low, and then we got out for a quick scalp. Right here, we entered some longs at this untested London low, and then we got out for a nice profit of around 100 points on that specific trade. Remember guys, this is a scalping bot, so we're not trying to catch the whole move, we're just trying to catch a scalp. The important thing here is that you guys can see the P&L curve over literally 3,557 trades and 5.5 years. So why am I showing you this? Because I want you to understand something very important. This strategy works, but to maximize your edge, you need to think about execution. And that's where algorithmic trading comes in. When I was trading this strategy manually, I was profitable, but I ran into 3 problems. 1, I could only trade when I was watching the charts. If I had a meeting, if I was traveling, or if I wanted to sleep, I missed setups. The second problem is that I would make execution mistakes from time to time. I would hesitate on entries, I would cut winners way too early, and I would revenge trade after a loss. And the third problem was that I could not scale. I could only trade about 1 to 2 setups per day because I was limited by my time and attention. So I hired a team of developers, and we spent 2.5 years building a full suite of algorithms to trade this exact. And we spent 2.5 years building a full suite of algorithms that trade these setups 100% automatically. And here's what I discovered. The algorithms execute this strategy better than I ever could manually. Why? Because they catch every setup, they never cut winners early, they never revenge trade, and they never get emotional. They just execute the rules over and over again, 24/7. Now I want to show you the other algorithms just so you understand exactly what they do. Because whether you use our algorithms or you build your own or you keep trading manually, the lesson is the same. If you want to compete in 2026, you need to think like an institution, and institutions use algorithms. This is our swing trading bot, and this algorithm trades my strategy on a zoomed out time frame, the 1 hour instead of the 5-minute. Why? Because sometimes you don't want to scalp. Sometimes you want to capitalize on a trend and let your winners run. Now the win rate is lower than the other bot, but the profit factor is higher, meaning we're targeting a higher risk to reward. Why? Because the biggest money comes from letting winners run. Most manual traders cut their winners way too early because they're afraid of giving back profits. But algorithms don't have that fear. All they do is they follow rules. You all can see that right now we're in some longs. I'm expecting price to come up and take out this high. So I think that we will take profit on this trade pretty soon. Remember, this is all algorithmic, so I didn't even press anything. I'm just letting these algorithms run. You all can see that right here, we took some longs, then we took profit. Right here, took some longs, took profit, longs, took profit. This bot is designed to catch the bulky moves. This bot is awesome, guys. This is Surge Bot. This bot scalps on the 1-minute time frame, and the whole goal of this bot is to pass prop firm challenges. For example, right here, we entered some longs around this untested low, and then we got out of these longs right at the top here for 160 points. One of my favorite things about this bot is that it goes on very long win streaks, meaning you can pass your funded account, while it's on one of these winning streaks, and then you can be set up and fully funded. For example, right here, we had 1 win, 2 wins, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. 26 trade winning streak, and then we had a small loss of $600, another win, small loss, and some more wins. And the great thing with this bot is that the losses are capped at $600. So why is the win rate so high on this bot? Because we're not trying to catch big moves. We are scalping small, high probability moves back to back. And for prop firms, that's exactly what you need. You need consistency and low drawdown. This is how you pass prop firm challenges. Not by swinging for home runs, but by executing consistent singles. Now, I don't want you to just take my word for it. I want you to show you some of our clients. This is one of our clients on his Instagram story, and you can see that he was very, very happy. Excuse his language. He was just clearly, quite excited. And he started with a live account, and now the live account has gone up to here. He said he started with $5,000, now it's at $10,327, which is really cool. He became a client of ours a little under a month ago, so he said he's already up 100%, and obviously that's really cool to see. This is a screenshot of a bunch of our clients' accounts from last Friday. You can see that this guy made $1,300, this guy made $3,400, $5,600, $1,700. This is a screenshot from our backend software, right? So this is pretty much us just looking at all of our users. Obviously, I blurred out their names and their phone number and their email for privacy reasons. This is another one of our clients, and he's saying that he's shifted his mindset from receiving payouts, because he's already received a few payouts, to stacking up and receiving a few larger payouts. So basically, instead of taking a payout when his account's up, 2 to 3 grand, he's gonna wait, use that money as a buffer, and then take out the payout when it's, 5 grand, 10 grand, potentially more. These are all real people getting real results. And the reason they're succeeding is simple. They're using a proven strategy executed by algorithms that don't make mistakes. Nobody's trying to reinvent the wheel. They're just using technology that already works. All right, so let me recap everything that we talked about in this video. I showed you the foolproof trading strategy, 3 setups, simple rules, repeatable every single day. The first setup is the break and retest. Second setup is a bounce off of an untested low. And the third setup is a rejection off of an untested high. I showed you trade examples. I explained the psychology behind why these setups work. And I showed you why simple beats complicated. I also showed you the data, the backtest, the profit factors, the win rate to prove that this is indeed profitable. I also showed you how automation can take your trading to the next level by removing the time constraint and removing human error. So here's what I want you to do. If you're serious about maximizing your edge, and if you want to see how you can take this strategy and execute it at the highest level, there's a link in the description. This will allow you to book a call with me and my team, and we're going to show you the full backtests, the live results, and exactly how these algorithms work. And we're going to help you figure out if automation is the right step for you. But whether you want to work with us or not, I want you to succeed. I want you to understand that this strategy works, and if you apply it consistently, you can be profitable. So if you got value from this video, drop a like, subscribe to the channel, and drop a comment telling me exactly what you've learned. Thank you for watching, and I'll see you all in the next video.